Mr. Karan Mehta, Principal at Green Frontier, focused on climate alignment, investment, and emerging sustainability-driven opportunities across sectors. Mr. Pankaj Sindhwani, representing Tata Capital with experience in structured lending, private credit, and growth capital solution across Indian enterprises. We also have Mr. Firoz Aziz, Joint CEO at Anand Rathi Wealth, a leader in wealth management strategy, private client advisory, and asset allocation for higher net worth investment. Currently his meeting is going on, so he will be joining us during the panel. Well, now to moderate this, I would like to invite on stage Mr. Vivek Iyer, representing Grand Thornton, bringing perspective on market trends, regulatory development, and corporate strategy. Let's welcome him on the stage. All right, ladies and gentlemen, please also join me in welcoming Mr. Rakshit Kapoor, Chief Investor Officer, and Motilal Oswal, overseeing investment strategies and portfolio management across assets, classic with deep insights into public markets and long-term capital allocation. Thank you so much, sir, for joining us.
Obviously, in terms of the topic is investors' outlook, capital and returns in an uncertain world, and the most interesting part is to actually hear what exactly as investors their thought process. And with no further ado, I'll just kind of go around the room where they can actually share their perspectives on their thoughts in terms of how they actually see capital flows changing, how they are seeing opportunities, how they're pricing risks, and what's the way forward. And with no further ado, I'll kind of start the discussion. And Anish, you want to go first, and then we can just go around.
You have a particular question in mind, but I just thought, given the current landscape, as to what could be happening on the private capital side. I think the private capital loves very cheap markets. So when valuations tank, that's when they rub their hands in glee. And this happened somewhere in 20 and 21, where we saw the maximum number of PE funds wanting to put their monies to work, and they knew that the Six Sigma event, which had happened, is not going to last forever, and they put in loads of money. And I think that is how PEs are designed for. They want extraordinary returns, and that's how they put their risk capital in. But having said that, in the Indian context, what we are seeing is, for the first time, over the last 2 years, the exit routes also have opened up in a big way for private equity. So when FDI has been more or less stagnant, gross FDI has been more or less stagnant over the last 2 years, the net FDI has dipped to almost a minor positive, which means the private equity which invested earlier is finding an exit route. I think that's one of the hallmarks which I would say that India has shown. If you can exit easily, you will want to put in a lot more money. So in 2026, or rather this year, we have seen gross FDI grow up by about 45%. And that's a very large number. And given the amount of trade deals that have happened now, is going to bring in a lot more certainty. So from FY28 onwards, we'll see record FDIs happening into the country. My sense is that manufacturing, which has seen only a 4 to 5% share, that is one which is going to explode. Financial services will continue to remain the largest piece. But I will pass it on to the rest of the team to give more flavor. Pass it on to you.
Pankaj, your thoughts.
Thank you, Vivek. I didn't want to start by disagreeing with you, Anish, but let me start either way. So, where I disagree with you is only one part where you said private equity chases extraordinary returns. That is probably not true. I think uh, what is probably expected in the private equity world is sustained, returns over a period of time, communication, governance. Of course, returns are, you are for profit and returns are at the center of whatever you're doing. But it's not as if people are chasing extraordinary returns. People are chasing good investments, as you said rightly, liquidity, good exits, and returns that can make sense. And when I say returns that can make sense, if an Indian investor is investing money in a fund, it may have its own expectations because it is not dealing with the cross currency hedge, the political risk, the country risk, and so on and so forth. And if an offshore investor is investing in India, the expectation therefore could be very different. Having said that, the way I see Indian private equity space or Indian markets attracting money from overseas, see, I think there is still a lot of opportunity, but people are still being very cautious. And I'm largely talking of, the foreign institutions. And the reason is twofold. One, that the sectors which can attract a lot of money and can absorb a lot of money have not been able to, so far at least, scale up or demonstrate the kind of liquidity that the market, so DPI, liquidity, the kind of expectation investors have, they have not been able to demonstrate. And so, on back of your mind, you're always uncertain while you are playing a 5-year game, whether it'll take 8 years, 9 years, or 10 years, whether you'll actually be able to get your money back or not. So, that is one large concern. The other is there are some sectors where the governance also has been a big deviation in the sense that people have not been very happy with the kind of governance some of the investing companies have displayed. So that's another reason why people look for trusted asset managers, trusted GPs, and that then shrinks the kind of GP pool that they would like to invest in. So GPs also need to increase their capacity, and if they have the right kind of strategies, right kind of pipeline, I think there will still be a lot of money. It's a patient game. It's not something where you would be able to attract trillions of dollars overnight. You'll have to work at it, and over a period of time, the money flow will continue to increase. And we've seen already there's a lot of traction for certain kinds of strategies where people are more than willing to invest. So that is about offshore, and I'll just conclude by saying this. There is a lot of potential to raise money within India also. Having said that, I think we'll need to be very conscious of the fact that we don't end up mis-selling the products. What we've seen in the market, a lot of these products get sold as wealth products where the investor doesn't even know what kind of product they are investing in. Are they investing 5 years, 6 years, 7 years? There is no liquidity. So sometimes that mis-selling happens, and that is something which ought to be avoided because there is so much money lying in India and we can make use of that. But if we are not able to keep that trust that investor has posed in the asset manager, then you'll not be able to sustain that inflow of money coming in from domestic sources. That's all for the timing. Thank you.
So, Rakshit, your. Oh, great. I think, look, I am not as bearish on some of these matters, but I think India, very cliched, but I think continues to be in a sweet spot. I think attracting a lot of capital across asset classes. And I'm sure at a point of time, investors find either the market's cheap, money goes out. At the same time, there are some segments of pockets where India does well. For example, if you see public equities, obviously hasn't really performed that much, but I think I agree with one of my panel members here that private equity has actually attracted a lot of capital. I represent a class which is private credit, that has actually seen a many-fold increase over the last 3, 5, 7 years, and across global capital, across domestic pools. Similarly, if you look at the other alternate classes like real asset strategies, you look at primarily money coming in REITs and InvITs. I think that's getting scaled up even faster from that perspective, and I think this overall what you call the private domain, which is say the private equity, private credit, real assets, and some of these kind of strategies are actually growing much faster, and I think they'll continue to attract capital. Second point is, I think we also need to see how the overall landscape is getting involved. I mean, I think a decade back or 2 decades back, there were entrepreneurs that were owning most of the assets in India. I think if you look at today, just for example, who would have thought that probably all the Grade A buildings in the country are owned by Brookfield and Blackstone, right? So, what I'm saying is the earlier ones is not a norm. So you see the private capital is actually is already the second largest owner outside of entrepreneurs. So I think we can't draw a linear line in some of these matters. I think there's always a point of time where certain asset classes do better, certain asset classes don't do better on relative terms. So I think that's my input.
Ammar, from your standpoint, how do you see it given your focus on the international markets? What's your perspective?
Yeah, thank you. Delighted to be joining this illustrious panel. And I'll come on to answer that question in a minute. Just a quick question. Who was in the other room listening to the Minister before this chat? Pretty much everyone, right? And it's wonderful to see some of India's leaders prominently championing and doing and saying what they say. From our perspective, so Sharon and I have been developing international trade for the last decade in and out of India. And the Minister was talking about the transformation over decades, right? If we look at the transformation of India, even not just in the last decade, but in the last couple of years, it's incredible, right? And the reason why I mention that is because in every era, capital tells a story. In the last decade, picking up on these points around, in the last decade it's chased yield, so returns, right? And understandably so. Everyone's looking for return on investment, is what they are. But in this decade, it is chasing alignment. Alignment with stability, right? Strategic corridors and innovation that can scale across blocks, across countries, across borders. We're not simply watching capital move east. We are watching power reconfigure, is what we're doing. And one of the things, the critical points that was made was trust. Right? Why should people trust India's economy? Well, actually, the ease of doing business and the people that you're doing business with are incredibly trustworthy, right? They've operated globally whilst maintaining and managing locally and encouraging that growth at a micro and a macro level. So just very briefly, India is not just a high growth market. It is becoming a central node in a multipolar system. We've heard about the division that's going on. With a $3.7 trillion economy projected to become the third largest globally within this decade, and as the fastest growing major economy, India offers demographic depth, digital infrastructure, and strategic positioning. Platforms like UPI and India Stack have created internal digital rails, the safeguards that protect investment and accelerate commerce at national scale. Corridor initiatives such as India Middle East, European Economic Corridor are reshaping trade and supply chain architecture, and capital recognizes infrastructure, and India has built it. And very, very briefly, one of the things that Sharon and the team and I have been working on for quite some time is how do you take the three biggest enablers that encourage 10x yield for investment and develop economies? What are those? The three are innovation. So within the UK, we've worked with MIT, Babson, developed the scale-up institutes policy to help organisations scale, because you hear that quite often, but what does that really mean? Well, it's innovation. The second is investment, right? And the third, and the most critical, I would argue, is internationalisation, new markets, because that's what you need to do, whether it's internal markets or external markets, you need to innovate, invest, and internationalise with a platform, and that's the three IP corridors. So in the UK, we've developed the UK's first international trade centre, and we've prioritised India above any other country. Don't record that, please, because I'm working across the Middle East and the US and everywhere else. But we've prioritised India, right? Because this is our roots, this is our history, and this is our heritage. So hopefully that answers a little bit of that question, but let's hear from everyone else and we can come back to it.
So,
Given-
I guess you're not saying that in every market that I prioritize that market and you will be cheaper than that market.
In my heart, maybe it's not in my head, but yeah.
Hopefully you're not just a crowd pleaser. Yeah, Vivek, sorry.
No, given that climate, decarbonization, and all these things are also very core to the whole stability, and given your focus,
Yeah.
your perspective on capital and from a green investment standpoint that you actually deeply look at, it would be interesting to hear your thoughts.
Thank you so much. So, just a very quick introduction. I'm Karan. I'm an investment director here at a fund called Green Frontier Capital. We're a climate-focused fund looking to invest in breakthrough technologies with very high decarbonization potential. I'm very glad you asked me this question. And by the way, we are a $4 trillion economy, not 3.7. And we're slated to go to $16 trillion in the next 15 years. Just imagine the amount of wealth creation. It took us almost 25 years to go from $1 trillion to $4 trillion. We're going to go 4 times that in 15 years. Imagine the amount of wealth creation that's going to happen. Think about the world in India. Well, think about India, what we were 25 years ago. And think about what we potentially will be in the next 15 years. And for me, that is the opportunity. As we grow, we have to grow sustainably. Businesses and industries are going to get disrupted, especially the industries that are extractive in nature. And that is why the focus on circular economy, which a lot of people today have heard that term. Thankfully, 5 years ago, no one knew what that was. Today, people know what circularity is. People know what recycling also is. EVs has become a big thing. Ask yourself, 6 years ago, would you even think that you would have an EV option to buy? Let alone ponder about it. And today, that's 30% of the new car market, or 50% of all two-wheelers. This is what I talk about disruption. That is exactly where we are looking to invest. So the biggest uncertainty that I face, or rather we face, is a certain American citizen who believes that climate change is a weekend conspiracy, but that's actually not, and thinks that oil is the new gold, but that's actually not the case. Aman, you spoke about disruption and innovation, and that's one of the biggest areas that we're seeing change in India on the green side. AI data centers, AI for example, is disrupting what traditional IT services companies used to do. Today, India wants to be a very leading player in data centers, and we are. We're seeing a lot of technologies on data center cooling being developed out of India, and not just for India, for the world. So that is the beauty of the problem, is that it's so homogeneous across the world that if we build something for India, and Indian innovators are so good that with their jugaad, they're able to make it cheap. So green doesn't have to come at a compromise, it's always value additive. So it's never like, listen, pay more because I'm green. You pay what you're paying, but hey, listen, by the way, like I'm saving you like a ton of carbon, right? So not just that. Now, with data centers coming in, just an analogy, our energy demand is going to go from about 1400 terawatts to about 100 times that over the next 50 years. Where is that energy going to come from? The answer is in a bill that was passed in December 2025 called the Shanti Bill, which very secretly said that private enterprises can now enter into nuclear energy. And I'm a big proponent for nuclear energy, and that is the future. Not just fission, but fusion. So these are the areas where I think there'll be immense amounts of disruption. We will see industries being reshaped. We will see the entire landscape, and as you can see, that's what excites me to actually deploy capital into these spaces.
Your perspective.
I'm Firoz. I've been listening to everyone, it's so nice. I represent a company called Anand Rathi Wealth. I can tell you 2-3 perspectives. One is, I can tell you how I tried to raise money from private equity. They didn't buy me at even 1,000 crore valuation. 6 months before my IPO, they didn't buy me at 1,300 crore valuation. And what am I trying to get to? Now today, if I'm at 25,000 crore market cap, as a listed company, the nuance of certain sectors, the foreign players are not able to get. If you're seeing from a fund manager's standpoint, there are some sectors which are macro to micro, some sectors are from micro to macro. For example, I represent wealth management sector, right? Of course, there is a lot of story that India is going to have wealth shift will happen. There's so much money in households that will happen. But who will grab that pie will depend on who understands the grassroots India DNA, right? So, point ye keh raha hu ki when I met 4-5 guys, and then I said I'll never raise money from private equity. Okay, that's because they couldn't understand what an actual DNA of an Indian investor is. Now, if you're thinking from a perspective of an investor into private equity, because we handle some reasonable tens of thousands of 12-13,000 clients of HNIs who have a few lakh crores, right? When they are investing, what I see is a big dichotomy. Now, if you look at the top 10 players who are investing foreign money as private equity in India, the top 10 guys have 12 lakh crores. In $1 billion, it's $150 billion is what the top 10 guys have. The Kedaras of the world, the Blackstones of the world, the Warburg Pincers of the world. Okay? Those guys are investing 12 lakh crore. The current value, their investment value is significantly lower. The performance of these top 10 for the foreigner is significantly below, and you would be amazed to see it is half of the India rupee return of the top 10 AIFs in India in terms of AUM. So that's so dichotomous, right? A foreigner coming to India in dollar terms making significantly more than 10 other guys. Again, I'm just measuring it on assets under management. It's simplistic. You can dissect and do a lot more data analysis for the lack of time. Why would there be such a dichotomy of Indian private equity not being able to deliver what a foreign private equity can deliver in India, not even beat it in rupee terms? This I saw some data 12-13 years back, and then I don't recommend private equity to clients because there's a U-turn. Like sir ne kaha ki bahut mis-selling. There's a lot of mis-selling, right? Mis-selling does not have to be right in the face. Now one guy I spoke to, he says I'll get 24% IRR compounded. Domestic private equity guy goes to my client. I said I don't buy. None of my portfolios I don't have private equity, so I will not let you buy this fund. So the response was, I'll deliver 24% post-tax, post-expense. So which implies, which implies you need to deliver 34% compounded, which implies if I give you 1 crore, you need to give me back 19 crores in 10 years. And when I asked him how much does this English commitment actually transpire in terms of multiple, he came up with 6 times dena padega. I have to give 6 times. The math itself is not adding up. So when it comes to private equity, people have to undercommit, over-deliver. Exactly the opposite had happened for the HNI fraternity. And that happens repeated cycles. I was one of the first few which got very excited. In 2004 was the first private equity fund in the earlier avatar, which was 1964 Trust Act. First trusts were being formed. Now there's an AIF platform 2013. I sold those real estate funds and private equity funds. The first few NAVs, great. By the end, I couldn't even beat the first NAV for not 1 or 2 funds, 22 funds. Right? So I think the industry has one thing to do, undercommit, over-deliver. Maybe the Indian industry has something to learn from the few foreigner one. And from a perspective of exits, it's so interesting. Where will these guys get an exit? So I don't know, Anish Saab ne aapne kaha tha. The most important thing for a person when he's coming is if you make me money, give me the money in the bank account. I think we all, if we went abroad to market India, if at all in any sum and substance, we should tell them, how would you get an exit? 12 lakh crores is the entire private equity current market value of the top 10 guys. The Indian household saving currently is 1200 lakh crores. Okay, 1200 lakh crores, out of which 6.7% is only there in equity. Only 6.7 is there in mutual funds and direct equity. So, do we as a country have the capacity to buy out private equity when they actually hand it over to the retailer? The answer is yes. And the perspective, domestic institutions have bought 8 lakh crores last year of listed equity. And I disagree that listed equities have not made money. That's a recency bias statement. 1.5 saal, 1.5 years, right? You take from anyone from any April 1st, 2021 April 1st, 2019 April 1st, 2020 April 1st, and tell me how many times have, on a 3-year rolling basis, Nifty has not delivered the median return? 0. 1.5 years, if you take from the peak of 2024, September, you can say that Nifty is 3% down. In spite of the great citizen of US trying to scare us on the 1st of August and gave again an Independence Day gift of another 25% tariff, we are 1,500 points greater than that day on Nifty. Right? The strongest man in this world wants you down and panicking, and you're 1,500 points up. Right? Somebody in the media was asking me, where is the weakness coming from? I said, where's the weakness? In spite of the largest sale in the FII, which was 1,66,000 crores, was sold by FIIs last year, they could still sell only 21% of what the domestic guy bought. In 2008, they sold 52,000 crores, which was 110% of what the domestic guys bought. We still need FIIs. They are very, very long-term investors. When I look at my Ben Post, which is the ownership of my company, I see some FIIs. Almost 2/3 of the FIIs have not sold a share ever since they bought it. And we call all the FIIs in the same category. They're very precious. Our dependency is lower, means no disrespect, but I think we will be able to give an exit to an FII if he came as an FDI. Back to you.
That was interesting, and essentially in terms of how in a multipolar world with different geopolitical scenarios, India is still able to kind of hold its own, drive its own agenda. And some interesting perspectives really, came out as a part of the conversation. Anish, your point on giving exits, which is very important because at the end of the day, it's about everybody being able to make a return, and that really drives, to a great extent, investors in the first place to come in. Pankaj, your point on the selling, and on your point in terms of which is about, which also kind of, has a segue into trust. That you, Ammar, actually spoke about in terms of how do we continue to kind of ensure that we enhance trust that's actually built in innovation that's very core to us, and and with innovation not just on digital infrastructure but also on investing in tomorrow. Energy security. You spoke about nuclear energy. You spoke about. Interestingly, one of the pieces I remember when we were having a conversation, you said that you like the word green investments. Yeah. And I think that accurately captures in terms of the focus because there are so many things that can be green. It's very important to capture the right theme, and the focus that you actually mentioned in terms of some interesting technologies. I mean, you should definitely connect. There are some interesting aspects that you mentioned in terms of companies that is investing in. But the whole focus on security across multiple fronts, I think, and that focus to drive kind of capital kind of came in, and Firoz's perspective in terms of cutting through the data and looking in terms of where are we actually in terms of making money, and a whole piece on the fact that invest for the long term and ignore the market panics, especially that are caused by geopolitical situations, because we have a stronger story. Akshay did mention that India is a bright spot, continues to be a great focus area. So I think the great perspectives in terms of came in from the panel, and it's a topic that unfortunately or fortunately can go on for hours. But we got to draw lines somewhere. And also given the fact that we have two events going across in the same city, with two of our panel members having to rush for the next session, I would like to honestly thank.
I would just like to.
Yeah, please.
I think, we are all, one of the key points which Karan mentioned about the trillions of dollars that is going to get added in the Indian economy over the next 10, 15 years. Just imagine China is at $19 trillion today, and we'll probably be $19 trillion about 10, 12 years down the line. Just imagine what kind of investments India would need, and who are the guys who will be investing in India. I think the American citizen has created a Six Sigma event. And I'm always, when you look back in the past, you always find that whenever a disruption is created, a new order gets created. And I think the countries which are going to grab into this new order, and I think we have seen this happen very quickly with us, with the EU FTA getting signed, with the US trade deal getting signed, with several other FTAs getting signed, and a few others which are just in the pipeline. So we are going to redefine everything and bringing into focus the fact that India is a growth market. You come to us. And given that US, EU, some parts of the Oceania side want to diversify their supply chains away from China, India is the only alternative for them right now. So I would be very circumspect of people who say that India ka story hoga ki nahi. I am very, very bullish on the India story, and I think this is a defining moment for us, and we should really do very well from here on.
Yeah, and that there couldn't have been a better ending to this discussion. Thank you so much for that.
Thank you so much for sharing these valuable insights with us. I request you all to please step forward for a group picture.